Hi guys, welcome to the weekly videos. Hope you guys are enjoying your weekend. And what a week we had, and we got a pretty busy week coming up as well, especially with some of the heavy hitters earnings coming up. And then we also have Fed speaking on Wednesday. So let's see what we have coming up and what are the charts saying. Hope you guys are enjoying these videos, and thank you for some of you messaging me back, especially I took that one weekend off. I will try to do these regularly, so thank you for reaching out, and thank you for liking and subscribing. Let's see what we have coming up. All right, let me share my screen. All right. Let me share first what we have coming up for the week. Let's look at that. Okay, there we go. So some of the earnings that are coming up. We got Amazon, Apple, Google. All of these are gonna be on Thursday after close, but we still have a pretty busy week. Before that, we got Exxon coming, UPS, GM, Pfizer. If you pull up Pfizer chart, you can see how much it's pretty bottomed out, and where Moderna is still kind of been having on some sort of a run. So something to watch there. If Pfizer is moving, maybe Moderna will be moving as well. You got AMD. I don't know what Snap's gonna look like once they report as well. You got Facebook. So we got some of pretty important companies that are gonna be reporting, and they are especially Amazon, Apple, and Google to be reporting after FOMC meeting, and um, what's his name? Powell is talking Wednesday. Yes, so he is speaking on Wednesday, and we're also actually supposed to be getting the data that they're going to be using for 2023, what the projection's going to look like, and what kind of a model they're going to be using, if it's changing, if it's going to be the same. So that all information comes out on Wednesday. We don't have anything coming out on Monday. And so last week, as you saw, market pretty much rallied. Any bad news was kind of a good news. Even with the earnings, most of the earnings, if anybody had a miss or if they were not giving a good kind of outlook for the future, still market ended up liking the bad news to be, it was kind of like a good news. But that's not, if you look at it, the reasoning for, Fed is trying to tighten the financial condition. What does Fed really wants to do? They want to reduce inflation. And to reduce inflation, they have to create a recession, which is the word that they don't want to use it. And it seems like the recession definition for recession has been changed, right? So what they need to do is Fed needs to kind of job market to slow down and cause more unemployment so people spend less money. But it seems like Fed's not really have been able to achieve that. What it's going to do is if more people are unemployed, it's going to slow down, help the supply chain, and inflation will come down because there is going to be less demand for it. And if there's less demand for it, people are going to be spending less, the prices are going to come down. That means inflation's going to come down, right? And seems like market moved higher, that it feels like that they are already priced in the 25 point basis increase that's coming in, and with the that news of pausing the rates as well. Unless Powell comes on Wednesday and says no more rate increase, we will see market make new highs, right? But if he says anything, we will see market move lower. So for them to have a tightening financial conditions, market can't be going on this run. So it doesn't really go hand in hand with what they're saying and what we are seeing in the market. It's kind of like, when you're trying to read a book and then you have to do an exam and you write what you read, but you still fail because it's not matching. And like it's still like I hope I'm explaining it right. Like you're still answering what you read, but yet teachers' understanding is completely different than what's in the book. So it seems like with the feds, what we've all known or been taught or what we've read about economics is, to have a finance to tighten the financial conditions, the market can't be going on this kind of a run, right? So it seems like what happened back in August, that run up is pretty much the same run up that we are seeing right now. So Wednesday's going to be a big deal. And usually the move happens the next day. But you also have to remember, we are going to be going into a new month, which means they're going to have a new money coming in. And that new money, usually at the beginning of the month, we tend to do pretty good, right? Like we tend to have good green days because new money is coming in and there's more investments is happening and it's flowing through the market. So it's going to be pretty interesting to see what he says, how market reacts, and then having all these big earnings coming up is going to also be the key, which turn does the market takes. So please pay attention to all those things. Wednesday is definitely going to be a big day. And even if you don't trade on Wednesdays, that is okay. Just take notes because history does tend to repeat. Watch your charts, pay attention to it, how everything is reacting. And then you have, Thursday, you get the jobless claim numbers, and Thursday is also the big earnings. And then on Friday, we get the non-farm payrolls as well. So there's a lot happening next week again. And then obviously with the earnings, we got quite a bit of going on as well. All right, so let's look at what the market has going on. So this is the futures chart. We got some imbalances to the upside on the daily, and even on the downside, we have a fair value gap. And then we have a weekly order block sitting up here as well too. So what we can see potentially that us breaking above 41.10 and seeing 41.16, 41.40, and 41.60. If we are starting to fill this fair value gap, there is quite a bit of then to the downside as well on it. So let's look at SP. Actually, I'm going to go over SPY and then I'm going to switch to a different chart. So this is the SPY chart. We have quite a bit of a dark pool print sitting here as well. And then 411 also is happened to be a big phantom print came on a couple days ago. So definitely 411 is the level that you want to watch. And then we do have a gap going up as well. If we are clearing, then 420, 430 definitely on the table. I wouldn't be it's really tough when you are in a bearish market to have these run-ups. Trust me, it's really, really hard. And when your technicals say something and then something else happens, it does mess up with you. But definitely there is a room to the upside. We've broken this trend line that we've been following for a while. We've done it before here, but we rejected pretty hard, ended up coming. But here we've now completed with 2 candles. We've rejected in this level somewhat, but there is still potential that we could continue to the upside. So please don't be just bearish. Just keep that in mind that it can continue to go upside. However, if we are breaking, you want to wait for me to be on the bearish side, I need market to break below 387. This is the level that I want to see market breaking below, and then we could continue to the downside. But if we are staying between this zone, the bounce could be actually really hard, and it could be even bigger bounce than what we've seen so far. So I just want to be careful. All right, so now let's look at Apple as well. I just happen to have Apple charted on this side. We do have this kind of like a broadening wedge pattern on Apple, but however, again, just like SPY, we definitely broke that as well. And we are right at resistance where we've rejected multiple times before and fallen back. But however, if we are clearing, you want to watch the 152 to 154 level. This is a pretty big dark pool print level as well. So definitely pay attention to this level. But if we are breaking below, I want them to first take out this dark pool print level, which is the 138. So you can use the dark pool print levels for your support and resistance as well. So this is what I want to watch to see, okay, we are turning on Apple as well, because this could potentially be just making a cup as well. So keep that in mind. This is just the same SPY chart, just I showed you guys on the other side. Levels are pretty much the same as well here also. All right, so let's look at a few things that we want to go over. Let's look at VIX first. Okay. All right. So with that run up, and this is the trend line, we've been watching this trend line for a while, right? So far, even though we broke below a little bit on Friday, we kind of bounced from it. We bounced here previously as well, and it has broken previously and then bounced from it. So next week is going to be interesting. If we do break below this, then we are definitely heading toward probably more to this $17, and you could continue to see the more downside of it if SPY really wants to go to 420, 430 area as well, right? So definitely something to watch. And for us to be bearish, these are the two levels that VIX really need to clear, which is the 21 and 21.64. So this level needs to be cleared before we can say, okay, we are probably headed more to the downside. Let's look at dollar as well. So on dollar, we've watched this channel and we've held that channel pretty nicely as well. And it happens to be like it's now kind of a consolidating in here. We want to see the bounce and we need to see it above 103 and 104 as well. So if I go down to the 1 hour, we do have this pattern here on the 1 hour as well. And we've rejected this trend line and we bounced from this trend line. So during the daytime, if you are scalping or day trading or trading anything, I would definitely be keeping an eye on dollar. It just seems like market these days is moving more what dollar is doing, not so much with VIX, where you will see VIX is green, market is green, and but dollar is playing a big key role where we are seeing a lot of volatility in the market with that. All right, so before we jump into that, last week I went over with you guys where you can see some of these, stocks can be seen if the 50-day average, the 500 top stocks where they are. So this is the S&P 500, and we are coming pretty close to this resistance as well, where market does tend to be topping off. So we'll see. I think it still has a little bit more room that it could. And this one has broken my resistance where it's starting to move, which has done it before as well. So I want to see now if can I hit to somewhere in the, 67, 70. Oh, we are already at 66.60. So I want to see if we can hit it somewhere in the 70, 73 range on above the 200-day moving average stocks. And this is the NASDAQ. So NASDAQ looks like it's pretty heavy, to be honest. So it could start to pull back. The max, I would say, has it's maybe another two where we could see this two at 63, 64, where it could end up, and then we see a nice gap down if market is pulling back. Same thing on the Russells, the stocks above the 200-day moving average, kind of coming up to a resistance on here as well too. So you can see that there's a pattern where market is pretty topped off too. So if you pull up your RSI or your, MACD, everything seems to be coming up to a pretty much an overbought territory as well. So something to definitely keep in mind. Even this one is coming up to a resistance as well. This is also the, the 200-day, 200 moving day stocks coming up to this resistance area. So definitely keep that in mind. Okay, So now let's go over these tickers. So I pulled up Amazon. What I want you guys to do is definitely take notes. Please mark these levels. I think we're gonna get some really good opportunities. If the market is gonna tend to be now moving up, you want to see for a proper pullback. And if you get a pullback, definitely be a buyer for to moving up because there is definitely room. So if Amazon continues to be bullish, we do have this nice gap that Amazon needs to fill. We have these are any orange line is a big dark blueprints. So I am aiming for first the 110 and 115. Those are my levels that I am looking forward this to reach to it. And then we do have this trend line. So if there's a rejection, longer dated puts definitely looks good. But if Amazon is staying above, I would say $94 to $97, it definitely has a room to pull back up to the 110 area easily. So something to keep in mind and remember. I know a lot of you do trade. And then same thing on Airbnb. It is looking pretty heavy. So this is my resistance, the 120, 121 area. As long as we don't cross this, and it is also a downtrend line, and if there's a rejection, it has a room to come back down to the $99, or we do have a new demand zones right here if we are starting to pull back on rest of the market. So that's something that I would love for you guys to keep an eye on. All right, let's look at some of the other stuff that we talked about last week. So there you go. We got spot. Very nice rejection on Monday from the supply. We did pull back, and then I hope most of you probably heard the news. We had like almost 80 tickers that had some sort of a glitch, and glitch happened to be hitting either rejecting or bouncing from a supply or from a demand zones or your strong support or a resistance area, which was pretty interesting that, it's a glitch, but however, it hit some of the levels pretty to the point. So something to keep in mind of it. I'm really not counting this candle because I really don't know how to kind of, you know, when they're saying it's a glitch, don't count that. So still, I think if we are going to consolidate on spot here, and they do have earnings coming up as well. Let me just 200, and this is the 10 moving average. Your RSI is pretty oversold here. I mean, sorry, overbought here. So definitely if your MACD is starting to curve and you're looking for swings, and this is in the overbought territory, I am definitely looking for this thing to pull back, even for the earnings. If we push through it and it rejects hard, I think spot has probably about $10 to $20 range that it could pull back. So something to definitely watch as well. Let's look at MasterCard. Um, MasterCard was another one, very nice rejection. And this is another stock that was part of the glitch as well. So not really counting that candle again, but the rejection on MasterCard has been right to the resistance and in supply zone. So I am looking for this to come down, at least test somewhere in the 200 moving average. And our RSI is already turning down, and you got that cross on your MACD as well. So something to watch. Then next, let's look at BABA. BABA is rejected right at the supply zone, and this resistance at 118 level. If you go back, you can see multiple times that it's rejected. We've actually gapped down and has some really nice drops from there. So definitely watching this one closely because we are in this play. And it is starting to lose the 10 moving average. So I want this to, this thing being quite a overbought on the RSI and your MACD turning around. So this is definitely looking really good, but I want to see if we can lose this 115 area. Then we'll probably head down to 109 and then 107 and then 102, and then probably continue down to fill this gap as well. Definitely has a really nice gap on it. So something to watch as well. All right, let's look at Chewy. Chewy did have earnings as well, I believe. Yes, they had earnings. No, they have earnings coming up. I thought they had earnings. Anyways, nice rejection right at the monthly supply zone. So, and this is, if you look at, that's my orange line where we have the dark blue prints at 46.40. Pretty nice rejection. Before you jump into a put, I definitely want to watch how we react to the 10 moving average, because a lot of the tickers that are below $50, we are seeing some really nice bullish run ups on that. So I would like Chewy to pull back and then continue to the upside of it. So I can wait. I'll wait for it to see where it pulls back to it and then be a buyer to the long side on this one. So definitely something to watch as well. Let's look at Roblox. It's sitting right at the 10 and at the 200 is about to make a cross. I'm still looking for, because this candle happens to be the glitch candle, I still want to have a small, little bit more pullback before I am a buyer for the upside of it. So that's another one that is on my list. And then CRM. Nice rejection on CRM right in the supply zone. And we have a little bit more room to the dark blueprint where it's sitting, but a very, very nice pullback that we want it to pull back before we become a buyers to the upside of it, right? Because currently you can't be buying when your RSI is this overbought. Even things can stay overbought for a while, but we're talking about CRM here. So does tend to pull more than it stays on the buying side of it. So I would definitely let it figure out first and let it settle before you jump into the long side. For even for puts, I would definitely buy time on your contracts. I would not be doing anything monthly, 2 monthly, 6 months, a year, honestly, with this market. It is hard to gauge, trust me. So time is your friend. So make sure that you are buying time on it. Datadog is another one. I think it still has a little bit more room up to the $84. So if we are running, if we do have, a little bit more space on SPY that is going above, could test this one on the 200 moving average. You got a nice cross on MACD. Your RSI has a room as well to continue as well. So that's what I have for this week. And I hope this helps some of you. And if you have any questions, anything, just let me know. Let me turn my video back on. I hope you guys have a good week. And please remember, when you are in a play and if there is a news coming out, if there's any sort of data coming out, just wait for that information to come out before you jump into it. Don't get caught in any of that. This is the perfect time to be studying, perfect time to be testing your strategies, back testing it, checking your levels and paying attention to all those things. Market's not going anywhere, trust me. So don't give any of your money back to the market. There's already, enough money that they take from the market. You don't want to be giving your hard-earned money. So take your time, don't rush into the trades, and we'll see what we get for next week. I hope you guys enjoy the rest of your weekend, and I will see you next week. Thank you.